And today we have Rhys from the Windsor area sharing some insights and hopefully some deals for you to keep an eye on.
What you'll see right here
Mhm.
is that you've had a massive drop, right? But take the last 3 years and average them out. And what you'll see is you're back at about an average. Like, to me, this is cause and effect,
Right.
right? This happened, the stupids happened. So you've had a natural adjustment the other way. You want to dig into some exclusive opportunities, Ed?
Yeah, let's do it, man.
This is an exclusive opportunity. I've got 3 of them for you today, guys. So this is an exclusive opportunity in what we call Central Windsor. Totally super healthy property that's been heavily renovated. It's a classic 2-story style that you'll see down in Windsor. This is a wholesale opportunity. The guys that are doing this deal, they're only looking for $747,000. Let me just show you a couple of photos. Look at that. $747,000. Right? Look at that.
Hello, YouTube. Welcome back to the Canadian Real Estate Channel. My name is Ed Hervias. I'm a multifamily investor and longtime friend of the channel. And today we have Rhys from the Windsor area sharing some insights and hopefully some deals for you to keep an eye on. Hey, Rhys, how are you?
Yeah, Ed, how's it going, man?
Excellent, man. Thank you very much. Good to see you back here again.
Yeah, absolutely. Our producer Peter was just saying I've been doing this for a year now, and it's like, man, it's been about a year. Yeah.
Time flies.
Yeah. No, it's been great though. It's I've met a lot of wonderful people now through the videos, and let's just keep it going. Let's keep educating.
All right, man. Let's see what's happening in Windsor. I've always heard good things, but I've never actually gone. I don't think I've ever been to Windsor.
Yeah, that's a pretty common statement. I think what's changed a lot in the last 20 years, especially with the internet now, is it's finally eliminating this erroneous stigma that's about 100 years old that goes back to Prohibition. You know, where Windsor was a dirty little car town, you know, smuggling booze. Yeah, I think in the last 20 years, what's happened is people have started moving down here for either for work or for retirement, and they don't come home, and then they're sending back photos of the big houses they're living in and the lifestyle and the boats and that sort of thing. We have more boats per capita than anywhere in Canada, and people are starting to clue in that, hey, maybe RoboCop and the 4 Horsemen of the Apocalypse aren't going down Main Street right now, you know. And we do have green grass here already. It was about plus 12 today. I don't know what it was in Toronto, but plus 12 and sunny, and people have started opening up their pools.
Oh, here is 9 degrees in Toronto today.
9, there you go. You guys are keeping up. Yeah. Usually it's about a 5 to 6 degree difference. So if you want, I can get into the monthly stats on
let's get started. Let's see what's going on.
There's my fancy PowerPoint.
There you go.
Guys, you'll see on every single one of these slides, you'll always see the email address at the bottom of them. And then our producer, Peter, will also put all of our contact information down underneath the video on YouTube, so you can get all our contact information for our Facebook investment group, our YouTube channel, our Facebook, our Instagram, etc. So, Ed, I go through some basic stats here. Year over year, it looks really bad, right? Residential sales are down almost 50% over February last year, right? That's actually not a bad thing for us. It means that the bidding wars have heavily dissipated since this time last year. In fact, January, February, and March last year in Windsor I call them the stupids. The property values went up 36% in 90 days. Wow. January to March last year. It was dumb. It was just so silly. And so I'm actually kind of happy with this adjustment, especially for the investors. And I'll get into why. But what you'll see right here is that you've had a massive drop, right? But take the last 3 months and average them out. The last 3 years and average them out. And what you'll see is you're back at about an average. Like, to me, this is cause and effect,
Right.
right? This happened, the stupids happened. So you've had a natural adjustment the other way, right? So what we're finding now is we're finding that the markets are now starting to stabilize, and the prices have actually gone up the last 2 months, right? And I want everybody, and I did this last month as well, I want everybody to imagine that there's an imaginary line starting here, where you can see my mouse, and just draw it across here, right? And what you'll see is that Windsor back in sort of 2014, 2015, 2016, 2017, it was actually, property values were going up, but they weren't going up by the Canadian historical average of 5% a year. They were falling behind, right? That's the line that's about 5%. And you can see there's a bunch of white underneath my mouse, right? So that means that if you're going to come back to that line, and it's very linear, Ed, going right back to 1867 to the beginning of Canada Confederation, it's 5% a year. Okay. And if you look at that line and you look for the Great Depression, or you look for the global meltdown, they're just little divots, and then the line comes back to the line comes back to that straight 5% a year line. Right. In Windsor, it underperformed for a while. So a lot of this was okay. It was kind of catching up for lost time for our property values to get back up to that 5% a year. This spike is the stupids, right? I call that the stupids. This is where it became unsustainable, right? Otherwise, it's pretty darn close, right? So I do feel we should be about here. If you're at that 5% a year, we've kind of dropped underneath again. And that's an opportunity for the investors. Provided the history of the last 151 years is going to continue, right? And quite frankly, in the bigger cities like Vancouver and Toronto, it hasn't continued. About 20 years ago, it started spiking up, right? And going up much more rapidly than 5% a year. But the smaller communities typically were still on that 5% a year line. And because of that, I still think there's a little bit of room for growth. But you're starting to see it now. It's coming back up, right? I don't think it's going to get like this again, but I do think you're going to come back to that sort of growth right now because of the sheer shortage of housing. I think you're for both renting and for buying. I think you're probably looking at closer to 8 to 12% per year gains as opposed to that 5%. Right. That's where we're at right now. Even though sales are down 50%, new listings are only down 11.1%, which means that investors have less competition per listing, right? There are fewer people that they're competing against to get the right investment properties. And the great thing about this property drop here, Ed, coming back to this slide, is that rents didn't go down. Rents continued to climb. Rents went up about 17% last year on 2 bedrooms. Year over year. I just looked the other day. And they went up 12% on single family, on 1 bedroom rather. So you're going up by 1% a month on rents, right? To 1.5% on the 2 bedrooms. Look what the property values were doing in the meantime.
Yeah.
Right. So all of a sudden, as sort of investment specialist real estate agents, we were celebrating because all of a sudden you had the cash flows again that people get accustomed to in Windsor. You come to Windsor for cash flow. Right. We've been one of the top 5 cities in Canada for the last 10 years when you add a property appreciation to cash flow to pay down a principal of your mortgage. You add those 3 together, Windsor's being top 10 for your money for about 10 years, top 5 for your money for the last 10 years.
Right. Excellent.
So this drop was awesome for real estate investments to continue to build their portfolios. It created a healthy gap again so that we're able to sell the smaller income properties. We're able to sell them between about a 7 and a 7.5% cap rate in general. Yeah.
Well, it does seem like if you were just to remove that those sections that you call the stupids, the line is consistent. There's that one blip, and then everything still remains. It's almost as if it were to continue where it was supposed to be. It is where it's supposed to be.
Yeah, as I said, it underperformed here for quite a while, and then it took off and kind of caught up, and then the stupids hit right here. So I do think the line should be about somewhere in here, but I do expect it because it's supply and demand. We don't have enough housing. I mean, I don't know if you've seen in the paper, but I mean, my word, the amount of announcements we've had, and I'm going to go over the latest announcement after I go through the stats. The hits keep on coming, as they say, in a good way. So yeah, the listings are only down about 11.1%. So sales are down 50% over last year, but the number of listings available to invest in have only dropped about 1/10.
Right.
You know, that's a good time to be thinking about it when there's ample cash flow again, right? I always love this one. I should make it into a graph, but I love this one because it gives people a sense of where they can invest. And what people will notice if they go back through the previous 3 months of doing these presentations is there were a lot more properties selling under 400 grand.
Right.
They've started creeping above the 400 grand mark. This 87 was about 57, 54, 57 last month. Now it's 87. So what's happening is that there's fewer of these and there's more of these, and these are about the same. So the distribution has started bunching in the $400,000 to $600,000 range, right? So what I want, and quite frankly, a lot of that is going to be pretty close to just over 400.
Right.
So what I want investors to understand is, like, we've got a couple right now that just were referred to us that are pre-approved at 250 grand. And it's like your window, as we're having this interview, Ed, your window's 90 days.
Nice.
You know, we can't do too much for you coming up. A lot of this is just going to continue to dry up. Like we're down to 16 sales now under 300 grand.
Yeah.
Right.
Yeah. There was a time where Windsor was all about the under 300s.
Oh yeah. It's going away, man. It's going away. And we still have the most affordable housing and the most affordable rental units in Canada of any of the major 20 cities or major 22 cities. We're the 14th largest metropolitan area right now in Canada. And you can expect with all the announcements that have come in, we're going to fall into the top 10 in size over the next 10 to 12 years, maybe 15 years, depending on how quickly we can build.
Yeah.
It's happening that rapidly. And it creates a lot of opportunity for the investor. If you think about it, if you're buying a house, and I preach this a lot because I know a lot of people hold on to the dream of doing value add, right? They want to do BRRRR strategy. They want to buy, they want to renovate, they want to rent it out, they want to refinance, and they want to repeat, right? Because then you're using your equity over and over and over again. That's how I made my money as an investor. But that's also how all my teammates made their money in different niches. There's different ways you can do BRRRR. It's awesome. Value add is fantastic. But the only consistent viable way to do it right now for sort of entry-level investors is buying a single family house and adding the mother-in-law suite. And you could rinse and repeat that about once a year. You can't do it too much faster than that because you need time to buy, time to renovate, but then you've got to give the bank time to see that you're managing the property properly, that you've rented it out and it's cash flowing. So the moment you finish your renovations and the moment you rent it out, you can't just go to Mr. Banker and say, oh, I'm ready for the next one, refinance me. They're going to go, whoa, 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 hold on, partner. New York minute ago, you just bought this place. Right. So you can only, if you've got 150 grand, you can do one at a time, once per year. If you've got 300 grand, you can do two at a time with us, right? You can do two per year, but you can't move BRRRR super fast because of the lenders kind of pumping the brakes. Unless you get a nice mortgage investment corporation that's willing to give you a good interest rate and understands your game plan, but that takes some work. Okay, so this is the new announcement, and it's not even in Windsor. It's about 75 minutes up the road in a small town called St. Thomas.
Okay.
So what's happening in Ontario right now, and to a lesser extent, Quebec, is Ontario and Quebec are two of the few provinces or states in North America where the power supply is almost all green. It's not emitting any carbon dioxide. So these car companies, they don't want to go to Ohio where they're still burning coal in their power plants to do an electronic vehicle company with batteries. It's kind of self-defeating, right? You're burning coal to make environmentally friendly cars. Makes no sense, right? So what's happening is Ontario right now is cleaning up, right? You've got a very cooperative federal government. You've got a capable provincial government. Dougie Ford and Justin Trudeau clearly like each other. Like, you've got to see these guys shaking hands and looking each other in the eyes. It's like one of you guys grabbing a beer in a hotel room. I mean, but that's a great thing for Canada, and it's a great thing for our province. These guys get along, and they're getting these things done. And so now the latest one. So we've got a huge battery plant hitting Windsor. And just for context, and again, if you've seen my other videos, I could talk about this forever. We've had tons of announcements, but we have landed the biggest battery plant in North America. And when it's done next year, you can add up all the other battery plants in North America, and they do not generate as much gigawatt power as the plant in Windsor. And yes, that does include Elon Musk and Tesla.
Nice.
Yeah, we revere that guy. He's a drop in the bucket compared to what's coming in our city, right? And again, you guys have heard me before, but Doug Ford has to more than double our electricity delivery to Windsor Essex in the next 4 years. And we're already a heavy industrial base sucking up a lot of power. He has to double it, or you're screwing over not just the Windsor economy, but the Canadian economy. Right. So what's happening is you're going to see, because we have a green electricity grid, power grid, it's not just about that you have that clean grid, so you're making batteries and you're making the cars here. It's also our rare earths that you need for those batteries. They're going to be coming from Northern Ontario, which again is running on green tech, right? So it's not costing a lot of fossil fuels getting burned up to extract those rare earths, right? And this is with the backdrop of China increasingly puffing out its chest and its power, as it has the right to do. But it's making North America scared and Europe scared. So now they're trying to re-domesticate supply lines. So America becomes very interested in our rare earths, right? They don't want to go over to places that China control, because if they do the wrong thing, China can go, oh, well, we have no cobalt for you today. You ran out, right? So the Western world is trying to avoid that. Why I'm explaining this, guys, is not for geopolitics. Why I'm explaining this is to understand why Ontario and Windsor benefit massively. So Volkswagen has now jumped on the bandwagon, and they're building a fairly large battery plant themselves up in St. Thomas, about 75 minutes up the road from us, pretty near London, Ontario. And you'll say, well, Rhys, why even talking about this on the Windsor YouTube real estate interview? Because it's not just about the manufacturing of the battery, it's the supply of the other parts, tools, dies, and molds that support this battery plant in St. Thomas. And you've heard me before say this: Windsor is the world's center for tool, die, and mold making. Right. And that's a direct spinoff of being next to Detroit, the birth of the second industrial revolution and the birth of the car in North America. Right. I mean, Germany would argue and Britain would argue they made the car first, but we did mass production first. So shut up, Germany and Britain. When you have these supply chains, Windsor's well suited, and Windsor's companies are well suited to also supply this battery plant, because you cannot ship batteries and battery parts long distances like you could with a combustion engine. They're too fragile. So you can't ship stuff down to Tennessee or ship things up from Tennessee. It's too far. It's too far. Now you have to centrally locate close to these battery plants with your plants, right? I was just with the CEO of Invest Windsor Essex, which is our local, very competent, very capable development commission. Basically a lot of the reason why we got our battery plant and hit the jackpot. And I was with them early last week about another matter, and I was with them all day. And I casually asked the CEO, I said, hey, how's it going with all these other deals that you guys are doing to support the battery plant? And I can't get into details because I don't have permission to disclose. But there's already over 1,000 jobs coming that they just haven't announced yet. And they're still talking with over another, like serious talks, like not stage 1A, first handshake. They're in heavy talks and deliberations with over another 40 companies. And that's not to mention all the companies that are already here that are going to expand. And this is not to mention the 100,000 square foot research and development facility full of 650 PhDs and engineers figuring out new technologies and new ways to make money and new jobs and new spin-off companies and new employment. It's all coming. It's all coming down here. Like professionals that I talk to down here, including myself, we all collectively believe that the city is going to go from its current size of about 350,000 and it's going to grow to about 700,000 probably before we die. It's inevitable at this point. This is the reason why you're building a second international bridge. We are the largest international trade route in the world. Over 10,000, I think we're up to 12,000 trucks a day right now over one stupid old bridge that's 100 years old. Like this is coming, guys. This is the reason why they just built a $2 billion freeway down here. They're building a $5 billion international bridge. There's going to be another rail tunnel that hasn't been announced yet. That's coming. And Doug Ford just sped up the timeline to build our mega hospital for another $2.2 billion because we're going to need it soon. Like we just, this is what's going on. You're bringing down all the power. You're building all the infrastructure. All the jobs are coming. As an investor, you have to get it through your skull that this is one of the places you really have to pay attention. You have to, or you're going to miss the boat. And this is all with the backdrop of being in a city that has the most affordable housing of any major city in Canada, which means you have room for property values to grow and rents to grow.
Definitely. I'm definitely glad I'm having this conversation because I've always seen Windsor from a distance, never taken the time to look into it. I've had family members who have had investors in their family just buying single family homes, but now looking at movement like this could easily you're going to need a lot of people. You're going to grow.
Yeah. Fortunately, we are one of the 6 cities that all the international immigration come to. So like point of reference, when Canada took in over 25,000 Syrian refugees, Windsor disproportionately took in, I think, about 1,200 immediately. That ballooned to 2,000 very quickly. And then those 2,000 Syrians told the other Syrians that Windsor's a really good place for them for a multitude of reasons. And they moved from wherever they were down. So we end up with about 4,000 of the 25,000.
And when is this plant expected to open up?
Our plant is 2024. This plant, I think, is 2025, 26. They've already allocated the land. They've already started scraping and clearing the land up in St. Thomas.
Yeah.
It's an arms race, man. Everybody's racing right now to get these plants done.
Yeah.
It's first past the post, right? I've got a book behind me, The 22 Immutable Laws of Marketing, right there. And rule number 1 is whoever's first.
Right.
Right? Like Coca-Cola was before Pepsi, McDonald's was before Burger King. It's hard to knock the champ off once they're established.
Right on.
So it's the same with these battery plants. They're going in really quickly because it's an arms race. Everybody's going as fast as they can on that and automation. And again, people won't know this, but Windsor's not a dirty little car town anymore. We're full of robots and technology and clean tech and software. So we are the biggest hub in Canada of automation software companies.
Nice.
How do you automate robots? How do you automate cars? Right? All that kind of stuff. And we're actually the home as well. We're the only city that has a software company that does automatic mortgage approvals. And that's a Detroit company that called Rock Financial that came. It's the owner of Dan Gilbert, he's the owner of like the Cleveland Cavaliers. Yeah, he wanted to take advantage of the skilled Canadian workforce, and what better way to do that than just right across the border? We thought it was going to be nice, 40 software engineers, blah blah blah. They're 2 years in, they're already up to like 200.
Yeah.
Yeah,
That's good. I didn't know you guys had a tech
times are changing down here. We're getting with the way that the automotive industry is going now. It's becoming highly skilled.
Right.
There's no sort of unskilled workforce. It's diminishing. But what's happening is the unions are quite good at retraining their people to match the skills required.
Right.
And then the schools now are starting to offer the trades starting in grade 11 down here. So you can start getting your apprenticeship for a skilled trade in grade 11. That's very similar to Germany. That's what Germany does. Yeah. So, and it's funny because kids will have a stigma about, becoming a plumber or whatever. But that stigma goes away when that kid shows up because he's getting paid as an apprentice. Mm-hmm. And that kid shows up to school in a brand new truck. That stigma goes away real quickly. Yeah.
Right on.
So that's coming now to St. Thomas, which further reinforces the stability of the financial ecosystem down in Windsor. And bear in mind, guys, they're not going to just put batteries into their own cars. They're going to put batteries into everything.
Yeah.
Like these are batteries that are going to be made for a ton of, not just transportation, a ton of things you haven't even thought of yet. For example, having a battery powering your home, right? Mm-hmm. Out in the garage. I know Tesla's toyed around with that, but these guys are all going to build that stuff, right? So these things are very stable with a consistent demand. It's not going to just be cars and, we don't need cars this year. Oh, everything drops. No, they're going to be making batteries for a lot of different things,
right? Which
further stabilizes the economy down here. You want to dig into some exclusive opportunities, Ed?
Yeah, let's do it, man.
This is an exclusive opportunity. I've got 3 of them for you today, guys. So this is an exclusive opportunity in what we call Central Windsor. So from like downtown, it's moving out towards the suburbs, but you're still in the city proper, if that makes any sense. And this property is in excellent condition. It was just recently renovated. And we've had our own assessment of what we think we can rent it out for, but we also double check with our favorite 2 property managers. And everybody came in between 21 and 2450. So we're just saying a projected rent of 2,300. After your taxes, mortgage, assuming an 80% loan to value, taxes, mortgage, insurance, and then 15% for vacancy, right? 5% for vacancy, 5% for management, 5% for maintenance. You're still coming out to about 580 or more on cash flow per month. And this is without adding an ADU or anything. This is just renting out a house, right? You can also see, I'll put the mouse on it, but you can see a side door here. See that side door going into the basement?
Oh, excellent.
I don't know this property well enough to know if that basement has got a high enough ceiling or not. But if it's got a high enough ceiling, guess what? You have a separate entrance for your ADU, right? So we can look into that if you're interested, guys. But if not, look at your coverage ratio, 1.5. Totally super healthy property that's been heavily renovated. It's a classic 2-story style that you'll see down in Windsor, in Central Windsor, in downtown. Yeah. So that's a great example of what's available, guys, right? But yeah, if you are able to add mother-in-law in the basement, that 580 gets up and starts flirting with $2,000 a month real quick. And people that have done house plus ADU, I have seen on multiple occasions recently, they are making $2,000 in cash flow a month on top of paying their bills.
So for these type of properties, if somebody wants to ask questions or if they need help connecting with a property manager, maybe a local insurance person, your team would be able to navigate that conversation?
Yeah, I probably should have said it at the beginning of the video, but yes, we have a team of 7 real estate agents that are all niche specific to specific real estate investment niches. Mm-hmm. And they all invest in their niche. So if you're looking to build up a portfolio of 2 to 6 units, there's Steve Girouge. Steve actually, unfairly here, does not have his degrees after his name. He should have that on the slide, but this guy's an MBA. He's no slouch. And he's got a hell of a work ethic when he's not distracted. But he's a typical real estate agent. He gets distracted all the bloody time. But I went to high school with him too.
Okay, cool.
But anyway, he's number one in Windsor for years now, doing anything from duplexes up to about 6 units multifamily. And that's what he focuses on full time. And generally speaking, he does over 50 of those a year.
Excellent.
Yeah, he's a machine. Yeah, so this is an example, guys, of the meat and potato stuff. Really quickly, this is fractional investment. So this is a company that we've hitched our wagon to for our clients that don't have enough of a down payment. If you don't have enough of a down payment, you're not going to have enough of a down payment for, let's say, at least a year. We all know how sort of up and down and crazy the stock market is right now. You do not want to be 100% on the stock market. Wealthy people, 33% real estate, 25% private equity, stock market 18, 19%, and the rest is like life insurance, cash, bonds. You don't want to put all your money on the stock market. Buy properly allows you to fractionally invest in real estate. So we have this condo right now up with them. Message me for my contact information below, and I can give you a special code where you're going to get some free money attached to the investment as well. All right. And yeah, so they're buying it for $275,000, and that's pretty accurate, the gross yield. And the projected ROI, I would say that's probably over a 3 to 5 year span. I'd have to see exactly what they're talking about, but that's accurate. There's nothing wrong with those numbers. So again, guys, if you're watching this, you don't have enough money for down payment yet, contact me. It's okay. And I'll give you the promo code, and you can go right after this property. This is a good, safe one in a newer condo building. All right. And this is a wholesale opportunity. What have I got here? I've got 2 minutes. So really quickly, this is a wholesale opportunity where we have valued it between 1 million and 1.1 million. Me, Jason Baldwin, Reed Renault all did separate assessments of value. If this wasn't surrounded, and this is the bad, if it wasn't surrounded by greenhouses in the backyard, then this thing would be worth 1.5 million. The guys that are doing this deal, they're only looking for $747,000 because that money allows them to leverage something nearby. Right? So everybody wins. They know they're wholesaling it. They asked me to sell it as a wholesale deal. Right? So the only thing is there's a need for speed. Like I don't know what the deadline is going to be, but it will be within the next 30 days. So you don't really have time to do a deal with me and then try to assign it. Like we don't have time for that. It's got to be somebody that's actually buying it. Unless, you're going to grab a partner. I get that. Right. But straight up assignment, I don't know if we're going to have time. So I much prefer seeing an investor or an investor who's going to grab his dad or another investor. Cool. Let's do it. Right. And the reason we think it's a fairly safe bet is it's a low inventory market right now. So we feel like there's going to be buyers that are going to be willing to sacrifice some location crappiness with the greenhouse in the backyard instead of a nice, empty farm or forest or whatever. But yeah, the size and quality of the home. Let me just show you a couple of photos. Look at that. 747,000. Right? Look at that. The whole house is like that. Now, there's some cosmetics you're going to want to do too.
Sure.
But I mean, that's what you're starting with, guys. 747,000. I think comfortably, if you're talking about a 25% bump gain.
How many rooms?
You'd be able to hear, I don't know, man. Let's say 20, roughly. It's a big house. Yeah. I don't have time to tell you the story of why these big houses exist, but it has to do with the greenhouse industry, and we'll leave it there because Pete is going to kill me. Producer Pete, if I keep talking. So there you go. Tutto finito.
Fantastic, Rhys. This has been very educational. I can't thank you enough for showing me around Windsor in a way, and we'll definitely connect for sure. I have definitely worked with a lot of investors in Northern Ontario. I was mentioning earlier, a lot of people taking advantage of those markets, but
Absolutely.
I should definitely
Yeah.
look into Windsor for sure, especially with all
Yeah.
the great news coming your way. I think we'll be
Yeah.
investing in Windsor very soon.
I look forward to reconnecting with you. Ed, thank you. That was fun. Peter, thank you. That was great. Thanks, guys.
Take care.
All right, man.